You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And this week we've got our first batch of coverage from the GAC, the Government Affairs Conference for America's Credit Unions, which took place out in Washington, D.C. last week. This week we will be bringing you our annual visit with the America's Credit Unions Economics Team, Kurt Long and Dawit Kabedi, and also the leaders of three companies who are the initial investors in a new AI-focused CUSO called CUltivate. Filene Research Institute, Visa Financial Corporate Credit Union, and Virtus AI, as I mentioned, are the first players in that CUSO, and we're going to be talking to them in just a second as well. Before we do that, let me just remind you, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And the one thing in particular, or no, let's take that back, two things to check out in particular this week. First off, don't forget the next CU Town Hall, which will be taking place on Wednesday, March 18th, 3 p.m. Eastern, noon Pacific. This time around, kind of a little bit like what we're doing here, we're going to be recapping the key takeaways from the GAC, which should be great whether you were there or not. If you weren't there, you get the chance to catch up and hear from the people who were. And we'd love for anybody who was in attendance. I know there's a few folks I've already got confirmed that will be on. We'll share their thoughts on what they thought the high points were, and we'll get into some of those conversations, as well as, I bet, a bunch of the regulatory issues that just keep on rearing their heads, including with the Hike the Hill that happened right after the content component at the convention center last week at GAC. And speaking of a great place to continue those conversations, just like the town hall, in a little bit more of an intensive fashion, CU Unplugged. I had several conversations with people out at GAC about this upcoming unconference. And it seems now that people have kind of gotten through the GAC gauntlet. This seems to be next on the radar, and I'm glad to see there seems to be a fair bit of interest and enthusiasm in it. This is March 30th, that's a Monday, through April 2nd, which is a Thursday. Tuesday, Wednesday are the real meat of the operation, but some get-togethers in the evening on Monday and continuing into breakfast on Thursday. This is in San Francisco at Visa's new Market Support Center. We'll post a link where you can find out more about that, but the whole idea is to get people in a room who have strong thoughts and desire to really hash through some of the big issues going on in the space. I'm sure AI will be part of that. I'm sure stablecoin will. There's all kinds of the regulatory environment. There's no shortage of things that we need to be talking about as an industry. And given how well we collaborate, we'll get back to that in a second with our chicken wings. I'll explain that one in just a minute. I think it's a great opportunity. So I hope you're able to join us. CU Unplugged. You can check out the website, cu-unplugged.com, or just check out the link at the show notes as part of this episode. Talk about a way of setting the tone for GAC. There was, some early events on Sunday evening. We always start with the Ed Talk, Ed Filene. In the late afternoon is the first kind of formal full plenary session over at the convention center. But on Monday morning, there has been for several years a breakfast held by the Filene Research Institute. This one started at 7 a.m. on a Monday morning. And my first thought was, I ain't going to be there at 7 a.m. because I'm going to be sitting there by myself. And I don't really want to do that. So I kind of poked around a bit and did some work in my hotel first. And I still thought I'd be one of the first people there at 7:10 a.m. And guess what? I had a hard time finding a seat. That's how intense people were about really jumping into this stuff. It was a great session. I think probably about 700 people provided a great general update in the space, and a couple big announcements, one of which was the launch of the credit union owned and curated CUltivate CEO. That's CU, capitalized like credit union, and then spell it out, CUltivate. This is a large language model and AI solution that is specific to the credit union industry, and I think it's a really cool idea. They got into a little bit of the detail on that one during the breakfast. I tracked down the initiative's leaders right afterwards to learn a little bit more. So let's have a listen. Okay, we've moved on from the Filene breakfast, where I believe we probably violated fire code. It looked pretty crowded. And following up on an announcement that I guess came out last week, but got a little meat on the bones from the conversation this morning. I'm here with Mark Meyer, the president and CEO of the Filene Research Institute, Fred Eisel, the same title, president and CEO of Vizzo Corporate Credit Union, and Anthony Volpe on break from the New York Yankees spring training. Right. I hear that you're a Boston Red Sox fan.
I am a Red Sox fan, but it's hard to root against him.
That's a little bit of a problem. Yeah. Co-founder of Virtus AI, and now the CEO of CUltivate, which is the reason that we're here, the new CUSO that you are jointly the launch partners to actually bring to fruition, which I'm not sure who wants to take this first one. I mean, just kind of quoting directly out of the press release, a foundational AI model trained directly from and for industry content and channels for the credit union world. And a CU-specific alternative to, as I think the press release again says, generic solutions like ChatGPT, Claude, Copilot, et cetera, with the right guardrails and the proper context in effect. So obviously, I know the history of all the organizations. How did this all come together exactly? Who wants to take that first? Mark, you want to?
Well, I think first and foremost, if you think of what the market need has been around knowledge management and capacity, clearly credit unions are looking for a solution to help give their team members easy access to information from a trusted source. So we at Filene, we were definitely hearing from the market of the need of how do we empower and enable our team access technology to technology safely and effectively. So that we saw the need.
And I definitely have seen that. Obviously people need to get smart on this. They can't just be asleep at the switch. On the other hand, people are very nervous about just going out into the wild with something that is just polling the entire internet and who knows what you get. I didn't realize this. You're contributing the accumulated wisdom of Filene's knowledge that you've built up over, 37 years now?
37 years, and it's one of the many business cases that will evolve from this. So we saw the need, but what's more exciting, I think, is Anthony and Mitch, the co-founders of Virtus AI, who are partners with us on a program called Member Pulse. We saw the need, but they saw the opportunity. So I think I turn it over to Anthony to talk a little bit about how they put the two and two together to create the Reese's Peanut Butter Cup.
And I know, Anthony, you were part of the Phi Lab with some of the Virtus AI initiatives also running through Filene. And I don't know, it sounds like this didn't directly spin up from that, right. But obviously that's how you got to know each other. Right. And also you've been working with Vizzo in other contexts as well.
Right. Filene has been an amazing partner for us through the Phi Lab. And really the recognition that one of the challenges with AI right now is the uneven adoption that occurs, even in organizations that want to move forward. You have some employees with ambition or interest, or they're just doing it on the side, make progress, but the organizations aren't moving. And so Filene has that unique capability and that respected position within the industry to bring best practices, to derive best practices at the credit union level and make sure everybody is using those best practices. So there is no longer, hopefully, uneven adoption, but there is strong, consistent adoption of AI. So, and then we brought Vizzo into this as well because they have access to nearly 1,000 credit unions, which are really critical to what we're doing. And of course, providing capital, but Fred's ambition and innovation for his membership was really appealing to us.
I'm thinking, Fred, that's also something I'm guessing you've got the voice of the customer right at your disposal, and you're seeing similar to kind of what Mark was talking about?
Exactly. We internally at Vizzo, but all of our members talk about the lack of trust going out to the internet using Copilot, Claude, ChatGPT. And as I said earlier, it's that every industry is building their own internal knowledge base. Why would this industry that is collaborative, cooperative, not build our own knowledge base, sharing data and information throughout? So it's the data and the information from Filene and all the information that's out there, NCUA website, America's Credit Union, but then our members, the folks we're talking to, don't trust the outside information they're getting. So when we were approached at Vizzo on creating something of CUSO CUltivate, it made complete sense because our membership does not trust and does not allow on the risk side, the risk profile, don't allow you members, associates, credit union users to go out to a chat or a Copilot. So this idea just makes perfect sense, and the collaboration of the three of us is absolutely perfect for us.
Makes perfect sense with the movement, owned by the credit union, so it's going to actually be built for purpose to fit this. I forget which of you made this comment toward the end. I was not aware about the Mayo Clinic. basically kind of doing the closed system that's kind of the same thing.
Yeah, I made the comment during the breakfast at Mayo Clinic. It's called Open Evidence. Mayo Clinic started it. They get research from three highly respected medical research groups, plus the clinicians, thousands of clinicians throughout the country go in and add knowledge to this knowledge base, but it's protected, controlled by the Mayo Clinic. And so, again, that's one example of many industries doing the same thing. And again, our industry being collaborative and cooperative, and as Mark said during his presentation, there's sharp elbows here. We're working together here.
I like
so
the chicken wings versus, I like that.
It was perfect. And so of all industries to collaborate and work together and share their knowledge base that's controlled, that we own and control, this is the perfect industry for that. And so we provided some anchor investment to get this started, but we want other credit unions to invest and own it, to be cooperatively owned by the movement, shared by the movement, sharing knowledge with all the partners.
Which I think you're touching on one of the questions that I had. The three of you are the initial investors, but you're looking, this is obviously a credit union initiative that is open to investment from others who are interested. And again, you don't need to be an investor to actually avail yourself. It'll be a service that can be acquired and purchased as well.
Yes. Yeah, and there are some of our credit unions have investment arms, some do not. This is open to all size credit unions for any type of dollar investment. I think I'll throw it over to Anthony. There's other opportunities for other partners to come in and provide research and information, and they'll get some piece of ownership as part of the CUSO as well, but that may not be a monetary investment, it may be more data related.
And Anthony, we were talking about this too. It seems to me the crown jewel is the database, but it's not just the database. It's actually the large language model and the tool for analytics and querying on top of it.
Right. Without the collective data of the industry, you can't do this. And so first and foremost, that's an enormous difference between what CUltivate is versus what the big public LLMs will be, because we have data that's internal to credit unions that those guys don't have access to. Second of all, it's recognizing that there will be a council of credit union leaders that will decide what is viable, what represents trusted and respected. So when we're citing information, we're providing it back. It's not coming from cockamamie, crazy places. It's really coming from the sources we trust, which again, back to open evidence, is what's created this momentum. When it only comes from the New England Journal of Medicine, they listen versus some other website. When it comes from NCUA, when it comes from the respected source like Filene, or it's coming from Q's or NCUA, like that's what we want.
And those are the slam dunks.
Yes.
But kind of the curation is the word that just keeps coming to my mind.
Right.
Then you get some other source that, okay, this looks pretty interesting, but we don't really know them as well. That's where this committee, the panel actually comes in. Right. Which gets to another question you and I were talking about before, Anthony. An individual credit union also, you're not necessarily all pinging an identical. You can actually build your own coordinating off of the pieces.
Credit unions have the opportunity to leverage all of their information through CUltivate without sharing with the entire movement all of that information. And while it is cooperative, they don't have to think that just because they want to access it within a given organization, that all of a sudden everyone has access to
and that they have to share theirs. Right. At the same time, they may choose not to take in some pieces that they, for whatever reason, don't find credible.
They share what they want and they can consume what they want. And I think that's a really important part of this. So I want to be clear too, a knowledge base is a word we keep using, and that's an important part of this. But again, it's the data that makes it so powerful. And it's a variety of tools that we own and control in the movement that also make it really valuable. So a knowledge base alone isn't enough, but the transparency that comes from how different credit unions are using it and us being able to share that. And Filene saying, wow, we looked at all the data of usage and found that here are key use cases, how people are finding value through CUltivate. Let's reinforce those. Let's build more tooling around that and ensure that we're giving better and better answers. And that's how you get a solution that's purpose-built and therefore better, more trustworthy than things that are out there.
And is it fair to kind of, when I think about the respective contributions you each make to at this stage of the game, and you say others can make other non-monetary contributions, Virtus has the expertise, the coding skills, Filene, Vizzo, you both are probably, I'm assuming, writing somewhat bigger checks, but you also have the distribution reach where you've got the credit unions already kind of in your portfolios that, this provides the credibility.
Yeah, the access to the research obviously is a big piece.
Exactly.
The piece that I think is really important when you talk about the helping credit unions build an important muscle right now is data. And only 11% of credit unions
I was
data
shocked
hungry.
by that number.
where they've really got the data muscle toned and they've got the sexy bicep on data, right? And this is helping.
I'm picturing a logo.
Credit unions, walk that path, and utilization of a safe AI tool is going to increase utilization of data, access to data, which is foundational. And I think what I get very, very excited about is the long game with this. If you look at where use cases could go, they are limitless. Whether it's fraud, whether it's best practices in governance policies, whether it's pricing around certain products or services, or contracts with this is limitless on how credit unions, and it will be a crawl, walk, run journey.
Sure.
It won't be a turn the volume up to 10. What you'll have is credit unions, as was identified, probably build the fenced off data for them, and then start to add, well, hey, if we all share our governance practices, we can have stronger, we know how everybody's got term limits, or what are best practices in governance. All of our researchers can dump their findings into here. It's going to be a very, very powerful tool in the months and years ahead.
And that's to the point that you were making again about this committee. They'll make those decisions, just how broad we want to make it. Now, this was obviously, you guys have been thinking about it for longer, but this was only formally announced last week. Got a little bit more content and visibility for a room of 700 or so people today, but I'm sure that will be more and more coming out. The best way, CUltivate's got its own website already, correct?
Yes, it does. CUltivate.ai.
And I'm sure we'll be hearing more. I'm going to follow up. You mentioned you've got a few more things going on at Vizzo.
Yes.
You've got the two new, the All Things Payments is kind of getting some additional legs. And now you've got another new center of
Very
excellence
exciting
around
on branding, storytelling, and differentiation.
So we'll talk a bit more about that. But if people want to find out more, I think we all know Filene.org.
Filene.org.
And Vizzo, vfccu.org.
vfccu.org.
Yes. Or just Google Vizzo Financial Corporate. Yeah.
And always Vertus AI as well.
That's right.
VertusAnalytics.ai.
It's
correct?
VertusAnalytics.ai.
But for the purposes of this conversation,
It's GetCultivate.ai.
wonderful.
Thank
Anthony
you.
Volpe, Fred Eisel, Mark Meyer. Thanks so much.
Good to
Thanks,
see you
man.
very much, guys.
I also took a look afterwards at Open Evidence, which was mentioned, which is Mayo Clinic's large language model that, in my view, it looks like to some extent it's a very similar model to what CUltivate's looking to do. And it looks like it's free to healthcare professionals. You can still get a pretty good sense for it if you just kind of nose around the website over there. Just the same way that Filene's going to be donating their knowledge base. The thing I noticed here is they have on their medical information platform the journal, multimedia, and clinical findings from the New England Journal of Medicine, the JAMA Network, which I believe used to be called the Journal of the American Medical Association, and their 11 related and affiliated journals, the National Comprehensive Cancer Network. The idea, again, being able to cordon off and provide some guardrails so you know that what you're hearing from LLM is credible information. And in a regulated industry, like financial services, and the desire to really make sure you serve the members, seems like a really good idea, which is exactly what CUltivate is going down the path of doing. And as I said, I love that analogy of the chicken wings versus the sharp elbows, which is something that Mark Meyer said on stage during the main breakfast. I think it's an apt kind of metaphor for the way this industry works. I mean, everybody's definitely trying to get ahead, but no one's looking to do it at the expense of somebody else. And if we have some shared learnings that we can do, I think that's wonderful. For our second interview today, if I'm not mistaken, I think this is the third different chief economist that I've covered at GAC doing a session that has nothing to do with any lack of stability. It has to do with just how long I've been going to these things. And if I'm not mistaken, all three of those chief economists that have been with CUNA and or America's Credit Unions were still on site, which is also great to see. I'm obviously not alone in thinking of the economic update as one of the highlights of the session. They had a fully packed room and a very engaged room with more questions than they had time to take. We'll get back to that in just a second. But why don't we jump into my conversation right after that and kind of building off the insights that Kurt Long and Dawit Kabedi had provided during that session. Back to our annual ritual coming out after the economic update here at America's Credit Union's GAC. Kurt Long and Dawit Kabedi, the economics team at ACU. Thanks for taking this packed room. Obviously, there's no shortage of interest in this topic, and there never is.
Yeah, that's right. I think you're right. I mean, the economy is always kind of an open box. People fill it with some of their own ideas, but we try to provide our perspective on it too. So
One of the things that you kind of, one of the key takeaways that you had, which it resonates with me, is that consumers, we know that they're kind of cranky these days. The rate, their level of satisfaction is at kind of the trough. You can find other places where it's been as low, but it really hasn't gone much lower than this over the course of the last 50 years, I think I saw. But the point that you made, Kurt, was that they seem to be resensitized to inflation. And I think, frankly, we just kind of got complacent over time, because there really has not been a true inflation event of any meaningful level since the 70s.
Yeah, I think that's right. I think for a lot of folks, this is their first experience with a period of, really high inflation. And so, you see this play out in a lot of different spheres. I mean, certainly it's a politically salient issue. The idea of affordability, it's certainly on the minds of voters. It's on the minds of policymakers who have to convince voters that they're the right people to, tackle this issue. But it's, it continues to register in really meaningful ways in survey after survey. People are still upset about inflation, even though the data on it suggests that, that the worst is past us.
Way past the peak.
That's right.
Before we started recording, you made, I think, a really interesting point that 3% inflation today, which is roughly where we are at, is nothing like 3% inflation in 2017, because people are just viewing it entirely differently.
Yeah, I think people, when they go to the grocery store, they're looking at prices in a different way than they did, prior to the recent bout of inflation. And they're just paying attention to, every price increase does not go by without their notice. And so, yeah, I think, as you said, the 3% inflation today, similar situation prior to 2021, I don't think would have, registered in the same way with consumers that it does today.
And as we know, it's very sticky on the downside, other than some commodities and things like that. And they're just starting from a higher base. In fact, that came up during the questions, and somebody quoted Milton Friedman back then. And even a recession, which I think he was kind of pointing out, you don't see a whole lot of deflationary recessions. Even if anything, it just kind of stops the increase in prices.
Yeah, that's right. I mean, if you ask people what they want, they'll say, I want the prices I had, 5 years ago.
Yeah, good luck
and,
with that.
There's no easy way to get there, and it probably would involve a lot of pain if you were to actually get it. And so, I think, what I was trying to suggest during our presentation was, we're just going to have to get back to a good economic environment and try to, give it some time. So.
And it probably it's circular or cumulative. You've got the issue about people both being, more concerned about being able to find a job. At the same time, they're becoming more concerned about potentially losing their job. So you layer that on top of it, it all kind of comes together. Dawit, you had an interesting statistic that I had not seen before. The St. Louis Fed, I guess, did this study.
Yeah.
And it was through Q1 through Q3 of the past year, 2025. I think the percentage of the GDP growth that we generated over the course of those first three quarters, 39% of it from AI was their finding, which
right.
Sounds pretty high.
It is. I mean, we already know, there is a lot of investment in AI last year that happened. So what they did was, okay, let's compare the investment that goes into AI to what happened during the dot-com boom. So when they did this, they have data for the first 3 quarters of 2025. So they split the contribution of each investment, like information and processing equipment, software, data centers. Of course, data centers didn't exist in 2000. But for the others, they just looked at the percentage contribution of each spending to the GDP growth during that period. And cumulatively, the contribution of AI investment was 0.97 of the 2.5% growth that we have seen during the first 3 quarters, which gives you that 40% contribution to GDP.
Can't decide how I feel about that. I mean, it's scary huge. Because if it stops, that's a big problem. On the other hand, we know that AI is, a more, computer and investment intensive, exercise even than back in the dot-com day. I'm thinking, I wonder, one of the big things that went on during the dot-com boom was webvan. If you're buying a whole lot of investing in trucks to deliver groceries, I'm not sure that technically counts.
Yeah. So right now, I think that's also a little bit the concern of that. Some of the investors, there is a huge potential in AI But the return, we still have to see yet. What kind of products and services are going to come out of this new technology, and how is it going to improve productivity, or how is it going to contribute to the economy. There is a lot of expectation already built in. That's why a lot of investment is going to this sector. But we have yet to see more in terms of return on these investments. Yeah.
But at the end of the day, 2/3 of the economy is still driven by consumer spending, and despite that kind of gloomy attitude they've got, as you pointed out, Kurt, they're still spending away.
Yeah, that's right. And so this presents a puzzle for economists. I mean, it used to be that we could kind of rely on what consumers tell us about how they're feeling as a pretty good gauge about what they're actually going to be spending, and get a good sense of what lays in store for the economy. But that has not been the case recently. We've seen this big downturn in consumer sentiment, and yet spending has remained elevated. So I think that speaks to, again, some of the residual frustrations about the period that is in our past, but still not affecting actual behaviors of consumers. But it also, I think, suggests that the economy is on relatively stable footing. Certainly not everything is right with the economy, but the unemployment rate is still just over 4%. People's wages are still growing, a little bit in excess of inflation. Again, not everything is great, but there's enough there to keep us growing.
That last point you made, I mean, we've talked before about the K-shaped economy, and I thought you had it's not a piece of data. I forget where was it. The New York Fed that got this one, the breakout of wage growth by quartile. And I thought it was interesting that, we talk about the fact that a lot of the spending, the really strong spending, is coming from the top quartile. But even the lowest one, you showed that wage growth is still a little bit higher than inflation. So they're not falling behind, but they kind of got used to getting ahead over the course of the not too distant past.
Yeah, so I think it's important to think about two separate questions when you think about sort of splitting up, different parts of the economy, say the top 10% or top 1% against the. So you can think about it as a sort of structural question of how equitable is our economy and who is it benefiting, who's lagging behind. These are all super important questions and worth asking. There's a separate question about sort of where, how sound is the current economy, and are we going to stay out of a recession? And in that respect, I think my read on it is that the bottom end, the lowest, 20-25% of households are, not doing great by any means. I think we would acknowledge that, they should be doing better.
And with the exception of housing affordability, which is probably where they're getting hurt the worst. Right?
Yeah, but they are, I think, still, the labor market is not a terrible one. Yeah. There's still job opportunities. There's still wage growth. Inflation is subsiding. And so, I think the conditions are not, not terrible in a way that would cause me to think, oh, we're right on the doorstep of a recession.
You had a chart. I've never seen this before. I thought it was fascinating the way it broke out the grid, basically where the market share resides for credit unions versus banks. And again, it broke things out by quartile, and it was a 2x2 grid. The one was household income and the other was net worth, the two axes, right? So you got 16 different individual kind of squares in there. And I thought it was really interesting. It really put into kind of stark contrast where the two different kinds of organizations play. Let's say a bit more about that.
Yeah, so I think, when we think about this phrase modest means, it's not clearly defined. Is it talking about income? Is it talking about net worth? You can see both measures used to try to sort of define this nebulous term. And so we've used them both. We can show that compared to bank customers, credit union members tend to be lower income. They tend to be lower net worth also. And so we had the bright idea, what if we put the two together and just kind of took a look, and it really revealed, I think, some interesting dynamics, because although the gaps in each individual measure are not that wide, when you put the two together, what you see is that banks really do focus on both the high income and the high net worth households, but they also had these sort of corner results where they serve a lot of households that are high income but low net worth. So, those might be, for example, someone just out of medical school, right? Got a lot of debt.
But clearly on the path to a
That's
profitable
right.
customer relationship,
That's
not
right.
too far down the road.
Not someone you would describe as someone of modest means, right?
Right.
And on the other end, you might have someone that's relatively low income but high net worth. That might be like a recent retiree or something.
Suddenly you don't have the W-2 anymore, but you've got all kinds of assets.
Yeah. So when you put all these people into the mix, then in an average term, the average income and net worth for a bank customer might not tell the full story. I think when you put it all together, it's pretty clear that banks are focused on people who are not modest means. And, that makes the credit union mission all the more important.
The one that really stuck out to me, I think the piece where on a relative basis, and we're not leading in any of them, it's no place are credit unions more than half, but the second quartile, not the lowest quartile, but the one up from there, both in the income and the net worth, that seemed to be the place that credit unions had the greatest kind of relative performance, right? Which, again, really reaffirms that message.
Yeah, that's right. I mean, these are people who are still, below median on both measures. And so, yeah, I think it really demonstrates how credit unions are fulfilling their mission. Another
example of that just occurred to me, I think this is one of your slides, Dawood, the benefit, particularly in auto lending, where I think we also kind of agreed that the outlook is probably a little bit rosier for housing lending coming up in the near future as compared to auto lending. But the area that offers the greatest benefit to credit unions over banks is at the subprime. The lower the credit level, the higher the differential in the rate that people are paying.
Yeah, that is true. And it has been a very consistent story. What we showed was only originations in 2025, and rates are higher, prices are higher. So,
I guess the higher the price, the bigger the differential you're going to see too.
Exactly. So that's what we see. So the median rate on a 6-year loan for auto lending is the lowest for credit union members across the credit score spectrum. And that is actually prominent if you look at for folks below non-prime credit score category, non-prime, subprime, and deep subprime. And the differential actually is the largest for deep subprime borrowers. We're talking about folks with Vantage score point, below 580. And they're the ones that save the most.
And looking at I just remember seeing the chart, the two bars. I mean, it's pretty darn stark. It's a significant difference.
So relatively, deep subprime borrowers who finance with credit unions will be able to save about $15,000 compared to folks who finance with our finance companies, and $10,000 with banks.
Yeah, and I might tag on to that. That's why it's so important that credit unions have an environment where they can grow. Because as you talked about, really the sweet spot for credit unions is that sort of second quartile, below median, but not all the way at the bottom. But as Dawood just said, the people who benefit the most are those with the worst credit scores, and we might imagine probably lowest income, lowest net worth. And so, I just think, these are the people who should be credit union members, but they're not, and so I think credit unions just really need to be empowered to grow and to reach this audience.
And it brings up a whole other host of challenges, whether it's visibility, awareness, all those types of things. On the other side of the lending story too, I thought you made some great points, Kurt, around housing. First off, the golden handcuffs, I think, as you called them, are coming off. There's fewer of the overall outstanding mortgages are now in that 3 to 4% range that people are like, I can't sell my house because I'm going to have to pay so much more just in interest. So that's coming down. But the one that I was really surprised by, we're now up to almost 1 in 4 households have a mortgage that's over 6%.
Yeah, that's right. So, this is another thing where you just kind of give it time and the market really turns, right? So now if you look at the distribution of mortgage rates, it looks a lot more like it was back in maybe 2014, 2015. We had the big changes in 2020, 2021 when rates dropped to, well below 4%.
A number that I just never thought I'd see in my lifetime.
That's right. And so a lot of people, wisely,
locked in. You didn't see the variable rates anymore.
Locked in and, during those periods. And so naturally, people who did, or even who just refied during that period, are a little bit reluctant to get back into the market and potentially, make their homes available to, non-homeowners right now who are maybe locked out of the market, but that is changing. And so, as you suggested, now we're seeing that the share of mortgage holders who have super low rates is starting to fall. And on the other side, the people with 6+%, mortgages went from, I think, less than 10% now to almost 1 in 4.
And I mean, I don't think and my recollection is the forecast that you've got throughout the end of 2027 has 2 more Fed rate cuts coming in along the way, right?
Yeah, that's right.
And so we're not expecting rates to go down dramatically, but they're already down off the high. So it's not like there's going to be a beating of the door for refinances, but we're probably moving in that direction. I think is that a safe way of putting it?
Yeah, it's I think a lot of uncertainty, especially for longer term rates. Yeah. So I think our 10-year forecast was to remain pretty stable. I think the recent events we've seen a couple of sort of head fakes on the 10-year where
it came under 6 very, very briefly.
That's right. So rates drop, but then they kind of crept back up, and I think there are certain structural forces, probably the U.S. fiscal situation being being the top one that are keeping us kind of in that range where we're at presently.
Speaking of uncertainties, we were just talking, it seems like every year there's a curveball that gets thrown right about the time of GAC. So before you put this together, you put out the caveat that we had, and I'm hesitant to even talk about it here because by the time this goes live in a week, who knows what new events and knowledge we're going to have about the situation in the Middle East. But clearly that's not truly baked into the forecast.
Exactly. So what we did was, we put the fundamentals out there, and then based on that, we have the forecast or the outlook for the economy, but we put an asterisk saying, okay, there are some risks out there. And one of the risks is, a regional war in the Middle East that could have, implication for prices here and, the other macroeconomic variables. And it happened. It was beginning on Saturday. We are in the middle of it.
Here already. The PowerPoint was done.
Exactly. Yeah. So, and since then, I think the price of crude oil, Brent crude oil, on Friday was below 70. Now today it's above $80. So that's a huge jump in a short period of time. And a lot of oil producing countries are involved in this war. So that has significant impact if it draws out for a longer period of time. That's when you can expect disruption on prices. Oil price goes up, inflation goes up, Fed may have to reevaluate monetary policy, and Fed policy rate goes up, and then that will have an impact on investment and or down the line employment, depending on the extent of the forces that are impacting this movement.
And and that's why we tend to look at core inflation, but it doesn't make things any happier.
And we were talking earlier about the salience of inflation in the mind of the consumer. Even in eras of low overall inflation, consumers have always been very sensitive to gas prices. So that's something, a downside risk going forward for sure.
I guess one last thing to close on, you also talked about the forecast for credit unions. And I think, we were just, again, discussing this. It looks pretty stable, kind of where it is, and as we were just talking, boring after the last few years probably isn't all that bad a thing.
Yeah, that's right. I think we see, very gradual improvement in certain measures. I think growth conditions right now for credit unions are not very good. I mean, we see that across the board. Loan growth, share growth, member growth is all, all of those measures are
exciting.
That's right. They're kind of low. And so we do see some modest improvement there. Elsewhere, it's kind of, more of the same. And so, I don't think this is a, great environment for credit unions, but it's not a terrible one either. And I think, more than anything, if we could get some stability, I mean, we talked about some of the uncertainties that are out there, but if we could get some stability, I think that is, is something that, credit union officials are really looking for right now.
I mean, one of the things that we actually, again, question and answer period in your session, delinquencies, because you actually see them kind of coming down a bit, that we probably have seen to worsen. People tend to kind of be more sensitive to what they've most recently seen, and the audience didn't seem to really necessarily see it quite the same way.
Yeah, I would say, we come at all of this with a lot of humility. Yep. So, that is our perspective, but we certainly respect where our members are coming from. And on a topic like loan performance, I mean, they're right at the front lines. They're seeing exactly what's happening. And so, I certainly respect what our members think. I think, as you said, they were maybe a little bit more pessimistic than what our outlook is. I think the reasons that we have some optimism is that we do see the economy continuing to grow. We see the unemployment rate being stable and inflation coming down. And so you put all those pieces together, and I think on average, people's financial situation should continue to improve.
Yeah, and I not diminishing at all their perspective on it, but I think you're from a slightly more objective distance that you can probably have a view that maybe doesn't bring quite as much emotion into it. So.
Well, yeah. I mean, I think we have blind spots too, though.
Of course, yeah, we all do.
Yeah. So,
Kurt Long, Dawit Kabedi, always a pleasure. I'll obviously be watching along. I'm sure and you put out videos. Is it on a quarterly basis that you have your economic updates?
We put those out. So we put videos out monthly.
Monthly, okay.
And then our forecast is quarterly.
That's what I'm thinking. Okay, so we'll post links to that. And I believe you said you had a blog post that had that piece around those. The 16 squares that shows net worth, and I thought that was extremely worthwhile. So I'll post a link to that too.
Sounds good.
Great. Thanks so much.
All right. Thank you.
Thanks.
And sure enough, that $80 oil that Dawit was talking about last Tuesday is now $100 oil, and maybe even a little bit higher. I'm not going to take a chance because you may be listening to this a few days after I'm recording it. They've got a tricky message to convey. I don't envy them in terms of laying out the economic message. Between the fact that things are rapidly changing and have so many uncertainties, but they're really threading the needle between dealing with cold, hard data and facts. And I think they've added some great ones, even looking at like the lower quartile of Americans who are still actually outpacing inflation with their earnings right now, although not to nearly the extent that they had been for several years. So on a relative basis, things don't feel as good as they had. So you got those feelings. And then, as we mentioned, loan delinquencies. The data, as they're looking at it, says may not be so bad, but the folks on the main line are seeing some potential issues there. So have to play that one out. Two different ways of looking at things, but I think if you put the two together, you probably get a pretty good view on it. I love the 3x3 matrix that Kurt talked about that really shows where credit unions have kind of the greatest market share and opportunities and where they do play the best in terms of the marketplace. Whether you double down on those or figure out how to create the message to hit some of those other areas, that is why we all have different credit unions and may choose to do it in a different way. But I posted a link to the blog that covers some of that topic as well. And always enjoy and appreciate that Dawit and Kurt take the time to cover this kind of topic with us, which I think is great stuff. And they always put out great things at their own website, and we'll post a link to that too. With that, another episode of the Big Cast in the books. Again, probably not as much on current events as usual because basically GAC became current events, and it will continue to because we gathered so much good content. We're going to be sharing it with you for the next couple of weeks. And as other news breaks in the industry, we'll roll that in as well. But again, a reminder, you can always track down more about the Best Innovation Group, big-fintech.com. If you go to the media tab, you will find past episodes. If you happen to be picking this up via Spotify, Amazon, Apple Music, etc., if you subscribe there, we'd appreciate it. And if you just take a look, you'll probably find the show notes with links to a lot of these things we've been talking about. Those are also readily available on the website. Don't forget CU-unplugged.com. Check that out. Hope you can join us in late March in San Francisco. And March 18th, you don't have to even leave your table, your desktop, to join us for the CU Town Hall. That's a virtual one. March 18th, 3 p.m. Eastern, noon Pacific. Doesn't cost you anything to attend, but you do need to register in advance. So please take a look at that. Again, my name is Glenn Sarvati. You can find me at my firm, 154 Advisors. You can find John Best, our Grand Poobah, on LinkedIn, and drop a note. Always, we love to hear what you're thinking, and you'll find a way to do that at the website too. And until next week, where we'll have more GAC content. Thanks again for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.